Tesla is no longer the only stock Elon Musk owns. That's our top story today on the Wall Report. I'm your host, Greta Wall. Twitter shares are soaring more than 25% today after Tesla CEO Elon Musk purchased a large stake in the company. A new SEC filing revealed Musk owns more than 73 million shares of Twitter stock, which represents a 9.2% stake in the company. And this makes Musk the largest outside shareholder in the stock. The purchase comes after he criticized Twitter in a series of tweets a couple of weeks ago. Musk ran a poll questioning if the site adheres to free speech principles, and as you can see the results here, the majority of people said no. He also said he was giving serious thought to building a new social media platform after running that poll. In the meantime, Tesla shares are also rallying today, up more than 4% after the electric automaker reported another record quarter of deliveries. The company delivered 310,048 vehicles and produced 305,407 vehicles in Q1. Now, Model 3 and Model Y vehicles made up more than 295,000 of those total deliveries. Tesla said it did struggle with ongoing supply chain challenges and factory shutdowns during the quarter, and its Shanghai factory did remain shut down today. Reuters reported an internal notice to employees told workers and suppliers that work would not resume today as previously planned. Tesla did also not tell employees when they do expect to reopen at this point. The factory has been closed since March 28th, when China put Shanghai under a new lockdown due to a new COVID outbreak. Tesla manufactures 6,000 Model 3 and 10,000 Model Y vehicles per week at that factory in Shanghai. And Starbucks shares are down more than 5% today after the company announced it is suspending stock buybacks. Today is Chairman Howard Schultz's first day as interim CEO, as the coffee chain looks for a permanent replacement for Kevin Johnson after he left. In a statement, Schultz said, quote, "This decision will allow us to invest more profit into our people and our stores, the only way to create long-term value for all stakeholders." In October, Starbucks had committed to spending $20 billion over the next 3 years on buybacks and dividends. Now, taking a look at the economic data of the day today, U.S. factory orders dropped for the first time in 10 months. Commerce Department reporting today that factory orders fell 0.5% in February. Now, that was slightly better than economists' expectations for a 0.6% drop. The decline was led by a 2.1% decline in orders for durable goods, which are items meant to last 3 years or more. Orders, meantime, for non-durable goods did rise 1.2%. Manufacturing has been a strong spot as the U.S. economy reopens, but factories are facing worsening supply chain issues, higher costs, and continuing labor issues as well. Now, oil prices are also rebounding today as supply concerns remain despite the U.S. reserve release. West Texas Intermediate crude futures are up 3.5% and nearing $103 per barrel. Brent crude futures, meantime, are up more than 3% and nearing $108 per barrel. And this rally comes as Europe and the U.S. are preparing a new round of sanctions against Russia amid mounting evidence of war crimes committed by Moscow in Ukraine. Ukraine has accused Russian forces of killing 300 residents in the town of Bucha. Now, President Biden is calling for Putin to be put on trial for war crimes. Talks have also been paused between the U.S. and Iran to revive the Iran nuclear deal, delaying any optimism that Iran could help alleviate the oil supply issues caused by bans of Russian oil. And traders are still focused on the Fed this week, and volatility is continuing in the Treasury market. The Treasury yield curve is still inverted today, heightening fears of an impending recession. The yield on the 2-year Treasury note is sitting around 2.45%, while the yield on the 10-year note is at just 2.43%. And that's not the only part of the yield curve that's inverted. The spread between the 5-year note and the 30-year bond is also negative. Now, that inversion was solidified by the strong March jobs report last Friday, as good economic data gives the Fed more room to get even more aggressive on inflation. And the central bank does release the minutes of its March meeting this Wednesday. That readout will give more clarity on how members of the Federal Open Market Committee feel about moving faster on rate hikes and the balance sheet reduction. So what do you think about the Treasury yield curve? Do you think this is still a good indicator of an impending recession, or will this be the first time in history the yield curve has inverted without a recession happening in the next 1 to 2 years? Let me know in the comments what you think. Do we have a recession coming, or will we make it through without? Be sure you're subscribed to my Coffee with Greta newsletter and tune in here to the Wall Report every day at noon Eastern to get the very latest market news. I'll see you all back here tomorrow.